This is your Swing Alpha Trade Report for February 8th, 2018. Right now we have another major down day. So we do possibly have a bottoming zone right here. We have this rising trend line, so we could expect some form of bounce. We also have the 200 moving average, 200-day moving average right here, which did work out two previous corrections. So we could possibly have a curling action right here. However, I would expect it to take another month for this correction to finally end. We could have another strong update tomorrow. It's definitely a possibility. We could also have a gap down and it'll go up from there. But I would expect somewhere around this region would be most likely to be a bottom. But again, we're just going to take our time. We're going to have patience. We're not going to go heavy long end by this bottom. In fact, we're actually going to start adding on a few shorts. When we see longs, we'll take some longs. When we see shorts, we'll take some shorts. For the last year, we've been almost all long because, to be frank, there's just been no bearish action. We just went heavy long for the last 5 or 6 months. But now the easy part of the market is over, so now we're going to mix our bets with both longs and shorts. We'll have the shorts as hedges. We still, in the end, will have a net long position. Right now, we still have a net long position. So from the top, the market has fallen about 11% from the very top to the bottom today. And on the year, the market has fallen about 4.3% from beginning of January to today. Now for our account, Swing Alpha is down about 4.9% from the top. So we've taken half the losses that large caps have taken. So that means we're definitely outperforming the market. And on the year, we are still up 2.9%. So that's right. We're still up 2.9% from the beginning of the year. So we're definitely outperforming the market. We're still green, whereas the market is not. Going to the other markets, first QQQs, we have a similar technical pattern. Again, it's closed right on this technical line. I would not want to buy this right now. However, this does mean that we'll probably have slowing down of this bleeding and we'll probably get some bounce at some point. Going to small caps, IWM. We have some support here, some technical support. We also have possible 200 moving day average support here as well. So this could possibly be a bottom for IWM. It is a bottom candidate. I'm not saying it is the bottom right now. I would definitely not buy this at this moment. Now going to the energy markets, XLE, definitely a bloodbath here. You can see this huge sell-off, just straight sell-off ever since it hit the top. I was definitely expecting to sell some. I did not expect it to sell off this much. I would not be surprised if we had even lower lows going into tomorrow. Lastly, VXX. We still have quite a lot of fear. A lot of traders are still hedging their bets right now. So you can see VXX is making a recent all-time high here. And then, of course, if you look at VIX, the fear index isn't showing as much fear as it was the last 2-3 days, but it's definitely still very, very high, relatively speaking, to the rest of the index. And in fact, the last time we've ever had this much fear is way back in the August 2015 correction. And in fact, I would say that the current correction looks very similar to the August 2015 correction. So you could go check that yourself. Now, lastly, we've had one trade that we took yesterday towards the close on IVC. So IVC, we had gone long on the 24th. So that would be this candle. We had gone long at the open. And then it had gone up. And then given the sell-off, it had really badly sold off. And we also had earnings today. Given the fact that the market was selling off, this stock was selling off, and we had earnings, we felt it was too much of a risk to hold. So we bailed out somewhere around here, around 17.25, 17.3. So we took about a 2.3% loss, which is almost insignificant. And we're just going to save up that cash to buy positions when the market does bottom out. It is unfortunate, though, that the earnings was good. We could have got a much better price, but, the risk was just too great. You don't take that risk, especially with a market like this. If you're a day trader, I would even recommend just staying out of the markets right now because the choppiness is really insane. It's incredible right now. So that concludes our trade report. Just keep an eye out for both longs and shorts, but generally we're going to stay in a large cash position for the next couple of weeks.